In this video, we're going to talk about top 7 best lithium stocks to buy and hold long term. Before starting, do like the video and subscribe to the channel for future updates. The company has predicted that lithium prices could decrease by as much as 73% next year and by roughly 10% this year, but they are mistaken. For starters, Benchmark disagrees with Goldman's estimate that a torrent of additional output is on the way and that prices will crash as a result, according to Bloomberg. Also, according to Benchmark, through 2025, the lithium market will be insufficient. Furthermore, according to Bloomberg, the sell side reports are massively overestimating the ease of adding new supply and failing to consider the complexity of bringing new assets into production and the qualification requirements. Matt Fernley, the managing director of Battery Materials Review, a London-based industry researcher, while there is plenty of lithium on Earth, it must be harvested from brine pools and underground reserves, and present mining operations are insufficient to meet the expanding demands of the auto industry, according to Time magazine contributor Emily Barone. So if you think lithium prices will drop shortly, I'll sell you a bridge. Prices don't decrease anytime soon because of the high demand and low supply. Sincerely, I have no idea what Goldman Sachs was considering, but we should be grateful to the company for enhancing the appeal of lithium stocks. So let's examine 7 lithium stocks more closely for investors to think about at this time. Number 9, Livent. The lithium production division of chemical manufacturing company FMC was spun off in 2019. Before the pandemic, the new corporation, Livent, had a brief history of independent operation. Since then, the company has been impacted by related problems with the worldwide supply chain. Sales, however, are increasing as a result of rising demand and lithium price. Investors can also gain some exposure to the lithium market through the farming chemical supply shares, since FMC still holds an equity stake in Livent. However, Livent is one of the biggest lithium pure plays available for a concentrated wager. Operating profit margins have increased in the mid-teens, which is assisting the business in investing in production expansion. In addition, Livent has a little debt and a large amount of cash and cash equivalents on hand. Number 8, Lithium Americas. Millions of new EVs could be sold as legacy manufacturers have ambitious plans to electrify their model portfolios in the coming years. Smaller, more speculative lithium equities like Canada-based Lithium Americas have experienced a significant increase as a result of the possible trend. Currently, Lithium Americas does not make any money. Together with its partner Gafeng Lithium, it is building lithium extraction facilities in Argentina and researching the viability of another location in northern Nevada. Because of this, Lithium Americas is an extremely speculative stock. Small exploration and development companies like Standard Lithium and Piedmont Lithium are other names in a comparable situation that are drawing a lot of investor interest. Take care when placing these wagers. Number 7, Lithium Stocks, Lithium Americas, LAC. The stock of Lithium Americas has dropped more than 13% in the previous month to just under $22 per share, where it's currently oversold. However, given the current pricing, I'd like to see a long-term rise back to roughly $32. The fact that results of a feasibility study on the first phase of Thacker Pass now anticipate an increased initial capacity of 40,000 TPA of lithium carbonate at the mine helps the cause. This is more than 30,000 to 35,001 TPA of lithium carbonate that was initially anticipated. Additionally, in April, Deutsche Bank analyst Corinne Blanchard upgraded the company to a buy rating and increased the price objective to $40 from $34. With prices rising, she thinks lithium producers are in a strong position, and when all of this is considered, LAC stock appears to be among the best lithium stocks to take into account. Number 6, Standard Lithium SLI. Standard Lithium has dropped from just above $6 to $4.71 per share since the beginning of June. Having said that, I'd like to see the stock retest $5.50 in the near future based on present levels. Currently, Standard Lithium is engaged in a joint venture project on 150,000 acres in Arkansas called the Lanxess Project, with a 3.14-ton LCE indicated resource. With more than 50 years of continuous commercial production, the area has North America's largest brine-producing fairway, as well as extensive infrastructure, an abundance of inexpensive energy, and access to chemical reagents and water sources. The project already has permission to carry out significant brine extraction and processing operations, according to the business. Additionally, 3 analysts have previously restated buy ratings on SLI stock. Did so in the previous 7 months. The 3 analysts' estimated price goals range from a low of 13 CAD per share to 1428 CAD per share. Investors should therefore keep a closer eye on LSI stock going forward. Number 5, Lithium Stocks, Livent Corp. LTHM. The pure-play lithium manufacturer Livent Corp is another excellent lithium company to take into account. The LTHM stock reached an oversold condition after falling from roughly $34.61 at the end of May to a low of $21.71. Having said that, I'd like to see the stock retest at least $31 per share in the near future based on current prices. Currently, the business operates 16 offices or factories around the globe, including its biggest and most diverse production plant in North Carolina. In addition, Phase 2 of its carbonate expansion will soon get underway in Argentina, and commercial production is anticipated to start in 2023. Additionally, earnings are remarkable. Revenues for the company increased by 17% a quarter over quarter QOQ to $143.5 million in the first quarter of 2022. The revenue increased by 56% year over year. Additionally, GAAP net income of $53.2 million increased 609% from one quarter to the next. To put it another way, this is a solid business in a developing sector, and it can be advantageous for investors looking to purchase lithium stocks. Number 4, Global X Lithium and Battery Tech ETF, LIT. Using an ETF such as the Global X Lithium and Battery Tech ETF is one of my favorite strategies to trade any hot sector. This ETF not only provides excellent diversity, but it also does so more affordably. LIT ETF provides exposure to stocks such as Albemarle, BYD Company, LG Chem, Livent Corporation, Lithium Americas Corp., QuantumScape Corp., and Piedmont Lithium, to mention just a few. I'd like to see the LIT ETF finally retest $79 in the near future after falling from its current levels, which it reached after falling from around $80 back in early April. Investors could profit now, though at a lesser price. Number 3, Lithium Stocks, Amplify Lithium and Battery Technology ETF, BATT. The Amplify Advanced Lithium and Battery Technology ETF is another excellent ETF to take into account. BATT provides exposure to companies involved in battery storage, battery metals and materials, and electric vehicles for $15.33 with an expense ratio of 0.59%. Tesla, Glencore plc, NIO Incorporated, Li Auto Incorporated, and LG Chem are just a handful of its top holdings. The ETF has dropped from roughly $16 per share to $14.19 per share since early June. I want to eventually see the BAT ETF retest an early April high of $18 from here. Number 2, Albemarle Corp, ALB. The 800-pound gorilla in the lithium market, Albemarle, has been humiliated. Alb shares hit a low of $198 after peaking at around $273. It is currently technically oversold and may be due for a higher pivot. Alb should soon retest $270 based on current prices, in my opinion. The business increased its full-year guidance for the second time in May. Sales in 2022 are now anticipated to range between $5.8 billion and $6.2 billion. It is anticipated that adjusted EBITDA will be between $2.2 billion and $2.5 billion. Additionally, it's anticipated that adjusted earnings per share EPS would range between $12.30 and $15. We've made a considerable stride in renegotiating more variable priced contracts with our lithium clients over the past 12 months. The execution of these contracts is a major factor in the anticipated increase in our financial financial results year over year, according to CEO Kent Masters. Based on favorable market dynamics for our lithium and bromine businesses, we now expect full year 2022 adjusted EBITDA to be more than 160% over last year. This is a positive development for Albemarle overall. Therefore, this is encouraging news for holders of Alb stock as well as potential buyers of lithium stock. Number 1, Lithium Stocks, Piedmont Lithium, PLL. Piedmont Lithium's share price dropped from a peak of roughly $67.50 to $47.50, where it is now beginning to pivot higher. I want to see the PLL stock rise above $67.50 from present pricing. Sayona Mining, a partner of the business, recently published encouraging study findings for a restart of a North American lithium mine, which is beneficial. A corporate press statement states that during a 27-year time frame, the analysis predicts that 168,000 tons of 6% spodumene concentrate will be produced annually. Additionally, Cohen analyst David Deckelbaum began covering PLL stock in late May and gave it an outperform rating with a $90 price target. TheFly.com cites the analyst as saying that Piedmont is underappreciated for its near-term spodumene projects in Ghana and Quebec, which provide it with cost-effective feedstock for vertically integrated lithium hydroxide conversion strategy, while its flagship Carolina Lithium project adds additional upside beyond 2025. Do let us know what you thought about our video. Let us know in the comment box below, and please do like the video and subscribe to the channel for future updates.